ladies and gentlemen. Today is Monday, July 20th, and I want to walk you through some of the trades that I made today and the things that I will be looking forward for tomorrow. As you know, this week is the earnings week, so the trades that I have done today are really circling around the earnings and with the idea of, taking advantage of the earnings ramp up. Basically, what that means is a lot of people is expecting good companies are going to report good earnings. So there's a pre-anticipation to drive up the price of some of the key stocks, as you saw from last week's reporting from Netflix. So let's come back to today. The trade I made today are, as you can see from the screen, Microsoft, Intel, IWM, Texas Instruments, and a bunch of other stocks. And I'm going to walk you through what I did, why I've done those trades, and how you can profit from those trades. The first one on the list, Microsoft. So Microsoft is going to report earnings this week, and there's anticipation Microsoft is going to generate good reports. So as you can see, that their stocks have been really trending up for the last couple of weeks. Right now is about 216, 214 today. So there's going to be an anticipation that it's going to generate good report, and earnings is going to gap up. Hopefully that's the idea. So what I did basically, I went to the Microsoft. I bought a couple calls that expired in August 21st. If we look at the calls column here, the one that I purchased is 260. It's way out of the money, and that's why you can buy it cheap. So the bid and ask price, it's 36 cents and 39 cents. I bought it this morning when the market first opened at the price of 35 cents with the idea of if it gaps up and there's a huge premium, I can sell a couple and get my principal back and then take the remaining trade and write it out. Otherwise, I'll be looking forward to, maybe just wait it out. If, hopefully Microsoft will surprise everybody else. If not, again, it's $100 for 3 calls. This is the idea about option trading. It's a small bet if you want to leverage the fact that, there's going to be potential opportunity down the road, but you also need to understand there's risk. So without all being said, none of this is actually a recommendation. It's my personal opinion, so you can follow it, you can play around with it. But again, none of those are actual recommendations. So the idea of profit off the call here is if it goes from the 6.35 cents that I paid to maybe 70 cents or 80 cents, I'll probably sell one call to get maybe 2/3 of the money back, and then just write it out for the remaining trades that I have left. So we'll see tomorrow if there's any additional, increase by Microsoft. Today it actually went up 4.3%, which is already a lot. So the chance of tomorrow it's going to be even higher is less likely. But anyway, that's the Microsoft trade. Coming back here, the other trade that I did is basically Intel and the Texas Instruments. Both those two stocks are basically in the semiconductor sector, and the fact that Texas Instruments and Intel, they're focusing on different applications. But really where I am coming from is I bought both, the call and for the Intel and the call for the Texas Instruments with the hope that semiconductor sales are gonna, when they report earnings this and next week, it's gonna surprise people. Where is that logic coming from? Earlier last week, Taiwan Semiconductor Company, which is basically a company manufactured the semiconductor chips, has reported a good earnings. So those companies, if you don't know TSMC, basically getting an order from Intel and Texas Instruments, well, not necessarily Intel, because Intel has its own semiconductor factories. But the fact that, Taiwan Semiconductor is reporting a good earning, meaning that there's a huge demand, and the fact that everyone is working from home, and there's a lot of demand for high-performance CPU, gadgets, whatever. So what I did for Intel, let's look at the Intel trade that I did. Intel, so I bought Intel September 18 call. I bought 5 of them this morning with the price of 24 cents each. it's a very similar idea of, I want to see where Intel goes in the next couple of weeks or months. If it goes up significantly, I'll probably cash out a little bit and get my initial investment back and then take the remaining trade and then ride it out. But other than that, maybe I'll just leave it and then ride it the whole way out. We'll see how it happens in the next couple of days. It's 3 months out or 2 months out, excuse me, so I have some time to ride it out. Similarly for the TXN, TXN is expiring August 28th. There's a lot of the hype around it. When I got into this market this morning, the price already went up a lot. So I couldn't get the deal I really wanted for September. So I ended up choosing the August one with the price that I paid for about 45 cents for the 160 call. As you can see, again, it's out of the money, about a 2 or 3 standard deviation out. Actually, more than 3 standard deviation out. So it's not likely gonna happen, but we'll see. The fact that it's August 28th, a month out, we will see if any opportunity. If it goes up and increase the premium of one of the calls, then I can sell it back. So those are some of the plays that I wanted to basically take in my feet into the water and then ride along with the market. Other trades that I want to talk about today are IWM, TWLO, and the Shake Shack. The IWM, for some of you don't know, IWM basically is the Russell, index. The IWM has been pretty steady around 130, 135, and then last weekend it got up around 146. So the idea that I'm having here is, selling a spread. Basically, I'm betting against that at a certain level above. IWM is going to stay above that certain level, and I can get a profit. So the trade I made for IWM basically is, you can see here, it's the August 28th expiring trade. Basically what I did is selling the 130 put and buying the 120 put. It's a spread of $10, and I can profit around 100 to 150 bucks. I think the price was it's 113 bucks. So basically the idea of those spreads, if IWM expiring on August 28th is stay above the 130, I can get 113 bucks into my pocket for free. This is taking advantage of the fact that it's a low risk and also low reward. It's kind of a safe play, but you never know. Again, I have to reiterate, none of those is actually a recommendation. It's all based on personal opinion. But the fact that it's around 130, stay there for a long time, and I think there's opportunity. It should be okay, but we'll see. The other trade that I made today is the TWLO. TWLO has actually gapped up a lot. TWLO today is increased to 10.23%. It's already very extended. I don't want to chase the stock. You can see it really extended way above. It's almost all-time high, if I'm not mistaken. Let's look at it. Yes, it is all-time high of 264. TWLO, for some of you don't know, it's basically a company providing cloud applications for other developers. So the fact that most people are working from home, everything is relying on cloud, there's a strong demand. That's why you can see from the early May till now, TWLO has enjoyed a huge run. And today, the fact that market is having a rotation is actually going more favor of the software sectors. So that's why TWLO has really jumped a lot. But I don't, like I said, I don't want to chase the stock. It's already way extended. So what I did is go the other way around. Basically, I did what similar to what I did for the IWM, TWLO. You can see, taking less time here. I'm selling the spread for August 14th with the fact that it will stay above 215, and I'm buying the 205 call. Again, it's a $10 spread, you know, $100 here and there. I actually did a 2 trade on this, so I think it's a more, I have a higher confidence on this, but you never know. It can, you know, suddenly decrease, you know, something dramatic would happen, but I'm telling the fact that, you know, it's going to stay above 200 level for a while. So that's what I did. And for the TWLO, I did selling the spread of 215 and the 205. So that's it. That's the TWLO. Some of the other stocks I'm looking at is Shake Shack. You know, Shake Shack, for some of you don't know about the company, basically it's a food gourmet hamburger chain. You know, they're selling nice hamburgers. I really like it. But, you know, it's COVID-19 season. Everybody is staying home. There's not a lot of demand for in-store, you know, consumption of burgers. So what I did is basically I played the bearish trade on this for Shake Shack. Let's look at the SHAK. So Shake Shack price has really taken a huge dive from earlier, you know, a couple years ago from 105 to the 75, and then dropped significantly because of COVID to 28. Now it's coming back up, but there's a huge concern on the 1.5 wave of COVID-19. So that's why the stock again trended down a little bit. So what I did basically for Shake Shack is play the bearish trade on that. Shake Shack, I'm selling the August 28 call and buying the at the price of $55 and buying the $60 call. It's a $5 spread, less risky than the other one, but the fact that I'm betting Shake Shack is that, you know, it will not go above 55 for me to take the whole premium back. If it goes above 55, then I need to manage this particular trade. So we will see. It's August 28, a month and a half out. I think that they're reporting earnings soon. So we will see. I don't think it should be a huge surprise, you know, huge sales because the fact that it's a food chain business. But you never know. Maybe they have some secret hidden online orders that really, you know, impress everyone. So that's the trade I made. You know, 55, selling the 55 call, expecting it will stay below 55, and then buying the $60 protection for myself. Here are the trades. Oh, I missed the one particular, you know, I did also get a particular stock, SPNS. I think SPNS is a stock that gapped up today. If you look at the SPNS, you know, it's a very cheaper stock. It's about $30. It's, you know, still under, it has good RSI. It's not oversold or overpurchased yet. And the fact that the moving average is, the short-term moving average is trending above the long-term moving average is a bullish sign. And, you know, CPN, it's breaking up today. And I think there's a potential opportunity of, you know, really extend it out. See, if you look at their daily chart, they really extended out from this particular node here. So there's some bullish signal about this particular stock. So that's why I purchased about 33 shares of SPNS. So here is the summary of all the stocks that I did today for July 20th, Monday. And it's a combination of option and the stock. Hopefully you guys can learn and enjoy and then, you know, get some inspiration from this. And tomorrow I'll be looking at the other companies that are reporting earnings. So the company that will be reporting earnings tomorrow are, let's see, I think Snapchat is the bigger one that I have a huge position on. The other one, Coca-Cola, I don't have too much, but I'm thinking about looking at Amazon because Amazon is going to be huge. And Microsoft is later this week. And of course, I have a small position in Tesla. So we'll see how it goes. But again, I will pay a really strong attention to Snapchat. I have a huge position on Snapchat, and the Snapchat is reporting their earnings way ahead of their, competitors or slash, social media partners. So it will really give us a good signal about, how the entire social media companies is enduring the second, quarter of the COVID-19. The first quarter was a really surprise. It really reported good. That's why Snapchat has reported a good earnings, and the stock has been on the road of, going from $11, $13 to $26. So let's see. I have a call on Snapchat. My call on Snapchat is basically about expiring this Friday, which I don't anticipate too much out of it. So I bought this Snapchat call earlier June 30th for the price of $36. Now you can see it's about $109. I think I purchased a couple calls. I already, took my profit. Actually, excuse me, I already get my initial investment back. So really, right now, I'm just riding this wave for free. So we'll see how it goes tomorrow and the day after. But again, Snapchat, I have a huge position of Snapchat in my portfolio, about 250 shares. So I'm really bullish on Snapchat. A lot of people are thinking Snapchat is the next Facebook. So we'll see. I wanted to see how it goes. With that being said, everybody, here is the trade that I did today and things that I'm looking to look forward for tomorrow. And if you have any questions, making sure to write me an email. I'll post the link down below. And thank you for your attention. I'll see you tomorrow.